Joining me on the line to discuss this week's market movers is Alan Clarke, economist at Scotia Bank in London. So Alan, the Bank of England released its quarterly inflation report on Wednesday. What are you expecting from the report in terms of inflation, growth forecasts and an interest rate rise?
So this publication gives us the best clues as to how soon or whether indeed the Bank of England is considering pushing up interest rates, and we'll get those clues from its inflation forecast particularly. Last time around it thought inflation would be pretty close to its 2% target, even though right now we're at 0. So it thinks that will be temporary and will pick up. I think not an awful lot has changed on balance. Oil's higher, but the pound's stronger, so oil would push up the inflation forecast, but the stronger exchange rate will push it down. A couple of other things going on. So you could easily see a situation where it's very little changed, but if there's a risk, it's that they push that inflation forecast up, and the market would interpret that as showing us that they're getting closer to the first interest rate hike. So I think that's probably the risk, because the economy is fairly robust, and the hike's got to come sooner rather than later.
Now we have Euro area GDP out on Wednesday. What are you expecting the GDP figures to show?
For once, I think the Eurozone is going to be the shining star. We've had UK GDP, which was pretty unimpressive for Q1 at 0.3 quarter on quarter. The US showed virtually zero growth. And the Eurozone is probably going to outpace both of those. We're expecting the pace to pick up from 0.3% quarter on quarter at the end of last year to 0.5% quarter on quarter in Q1. And it may well get even better as the year progresses, because survey indicators are improving. The long and the short of it is that the Eurozone's quantitative easing programme is working. We've got a weaker exchange rate, lower bond yields, and the lower oil price is also helping Eurozone consumers as well. So it should be good news. US
retail sales and consumer sentiment are on the agenda this week as well, and retail sales are expected to come in stronger year on year, as is consumer sentiment. What kind of figure do you think we will see, and how will markets react ahead of the release?
Well, I think what we'll get is an okay number, but not particularly great. We're talking sort of 0.2 to 0.3 month on month. Consumer confidence has come off a bit, but it's still at a fairly elevated level. But the recent run of data from the US has been pretty soggy, so I'm sure that won't continue forever, but we're not particularly optimistic for this month. It'll probably get better in a few months from now.
Now, what other events coming up this week have the potential to move markets?
Well, the main one in the UK is, and this is admittedly quite backward looking, construction output. Because although we got the first quarter GDP data already, which runs January through to March, we haven't yet had the concrete monthly data for industrial and construction output for March. What they've assumed is a massive 5.3% month-on-month gain in construction during March. If it doesn't meet that assumption, and if it's 3.5% or less, you could actually see the UK's preliminary GDP forecast revised from bad to worse, from 0.3 to 0.2 quarter on quarter. I don't think that will happen. It's an outside risk, but it's something that we could have a bullish first half of the week with the Bank of England getting more upbeat, and a bearish second half when if this data points to a weaker Q2 GDP.
That's great, Alan. Thank you very much for your comments. Well, that is all for today, but stay with us here on Dúchascopy TV to find out how these events unfold. Goodbye for now.